Hey guys, it's Ryan with RyanApproveMe.com, and this week we are doing a whole week dedicated to frequently asked mortgage questions. And the first question I wanted to answer is probably the question we get most often, and that's, what does a bank look at when I'm applying for a mortgage? And right now, it really comes down to four pretty basic things that a bank's going to look at when you're applying for a mortgage. Number one, they look at what's your income and your debt. So pretty much, how much money do you have coming in every month and how much money is going out. And what they look at coming in is any money you have coming from your job, regular pay. They also look at if you have any alimony or child support or inheritance money, any money you got coming in every month versus what's going out. And they're not really looking at, on the debt side, not really looking at like cell phone and utilities and groceries, that kind of stuff. They're looking at more fixed revolving debt, like credit cards, car payments, student loans, that kind of thing. The next thing that the bank's going to look at, besides income and debt, is assets. If you have any other money in the bank, any savings, 401k, retirement, that kind of thing, what kind of money you have in savings. Next, they're going to look at your credit. And when the bank pulls your credit, this is probably one of the biggest things that they're going to look at. It's not only your credit score that they're looking at, although that's pretty important. They're also looking at what shows up on your credit report. So they're looking at how long have you been building credit, how many accounts do you have open, if there's been any delinquencies recently in the last couple of years, really looking at just how sound you are and what's the likelihood that you're going to pay back the loan they're going to give you. And then the next thing that they're going to look at is the property itself. Now, whether it's you're purchasing the property or you're trying to refinance, they're just looking at what's the value of the house that you're getting versus how much money you're trying to borrow on it. So they're going to generally have an appraisal done, whether it's a drive-by appraisal or they're actually going to come and inspect the inside of the property. Will determine what kind of loan you're getting, but they're really looking just to see what houses in the neighborhood are selling for, what that house that you're trying to finance is really worth, and how much money you're trying to take out against the property. So really those four things, income and debt, assets, credit, and the property itself are the four major things that a bank's going to look at when they're trying to evaluate you and give you a loan on a property. If you have any questions or questions that you have specifically to a property, you can go ahead and email me. My email is Ryan@RyanApproveMe.com. And remember, when you're thinking about a mortgage, think RyanApproveMe.com.